Hello and welcome to Virtual Investor Conferences. My name is Tim Regan, and on behalf of Water Tower Research, we're very pleased you have joined us for our AI and Technology Hybrid Investor Conference. Our next live presentation comes from Pineapple Financial Inc. Please note you can submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Shubha Dasgupta, Chief Executive Officer, Co-founder, and Director of Pineapple Financial, which trades on the NYSE American under the symbol PAPL. Welcome, Shubha.
Thank you so much, Tim, for the introduction. Good morning, ladies and gentlemen, and thank you so much for joining us today and your interest in learning a little bit more about Pineapple Financial and how we're changing the Canadian mortgage landscape. I'd love to jump in by giving you a little bit of background on how the company founded and how we got to where we are today. So, this company was founded about 8 years ago when my co founders and I took a look at the Canadian mortgage landscape after spending individually about a decade in it at that point in time in various aspects sales and marketing, technology and automations, as well as securitizations of loans. And we saw an incredible opportunity for us to begin digitizing what was a very analog and antiquated industry. It was heavily driven through manual processes, very paper heavy, and we were seeing it on the cusp of the transformative period where customers wanted better connectivity to their brokers and brokers wanted better interactions and connectivity to their lenders. We thought that we had an ability and a vision to be able to drive through what the next generation of mortgages could look like. And over the last 8 years, we've been doing just that, becoming the fastest growing mortgage company in Canada, the 26th fastest growing company in Canada. And we've been really making an impact in the lives of many Canadians in their home buying journeys. Some of the things that I'm very proud of over this journey are that as we knew we were building a high growth technology company, we also knew that it wasn't growth at all cost. And we had to build a business model that coincided with that, that could be scaled for success. And for the first 4 years, we focused in parallel on both. So we bootstrapped the entire development of our technology infrastructure. And as we went from 6 initial users on our platform to 200, at the same time, we built a business model that was profitable for the entirety of those first 4 years. It was at that point in time that we realized we had tremendous industry adoption, a fast growing system, as well as a proven and scalable business model that we decided it was time for us to begin expanding the business. So in April of 2021, we raised our first round of capital, $9.3 million, with a goal of being able to scale and grow this business coast to coast. As mentioned at the time, we had about 200 users on our platform, funding just under $1 billion a year of mortgages and operational only in Ontario. Fast forward the clock to today, over 700 users on our platform, represented in every province across Canada, funding over $2 billion a year in mortgages. So we've been spending the last 4 years scaling and strategically deploying that capital towards successful business. I'm going to jump into today's presentation and take you all through. And as mentioned, please feel free to ask any questions in the chat, and I'll be able to address them at the end. So, just quickly to jump in on who we are, Pineapple is a cloud based enterprise management platform. What we've built is a system that's fully end to end integrated to take customers, mortgage agents, and our lender partners through the mortgage life cycle seamlessly. Everything from lead inception all the way down to 25 or 30 years later in a customer life cycle is managed from within the platform, and we've been able to onboard every major Canadian mortgage lender into the system. We've also integrated with a variety of technology partners to make this vision come to reality, partners like Salesforce, Equifax, OneSpan, and Google. I just want to briefly touch on the Canadian macro market and what's happening in the mortgage environment there. So, the first thing that I'd love to highlight is the key differentiator between the Canadian mortgage market and the US mortgage market. In Canada, we don't offer 25 or 30-year loans. We have short term mortgages between 1 to 5 year terms, which are amortized over 25 or 30 years to keep payments down and reasonable. Now, the importance and the significance of this for us as a business is on average, as Canadian mortgages renew or refinance every 3.7 years, it gives us an incredible opportunity at having this secular environment and this constant revenue opportunity. So we have a reoccurring revenue stream of between 7 to 11 transactions that we're going to do for a customer in their mortgage life in Canada. So that takes away from the $4,500 transactional value and really allows us to realize the approximate 68,700 of customer lifetime value. Now, the second thing that I'd love to highlight is that the Canadian mortgage broker channel today has about 48% market share, but growing tremendously. So we can see that over 70% of Canadians under the age of 45 prefer to use a mortgage broker, and over 80% of first time home buyers prefer to use a mortgage broker. And when we compare it to the rest of the world in Europe, Australia, and even here in the US, we know that mortgage brokers have approximately 80% market share across the board. So our business, as we continue to grow, will continue to grow alongside mortgage brokers that are gaining and earning more market share in the community. Now, when we look at the next few months and years ahead of us, we ask ourselves the question of what opportunity is going to be available in that macro. Obviously, we face the same headwinds as we have here in the US over the last, 2 years with high inflation and high interest rates. But over the next 24 months, the market in Canada looks incredibly promising. We've seen the fastest population growth of any country in the world today at 3.7%. And we've welcomed over 1.2 million immigrants in the last 12 months, and we're forecasting to welcome another 1.2 million in the next 12 months ahead. Statistically, over 80% of new immigrants to Canada will purchase a home within 3 years of arriving. And when we couple that with the approximate 4 million Canadians that are coming of home buying stage and age of life, that gives us potentially 4.7 million Canadians that will be looking to buy homes in the next few months and years ahead. Now, I also mentioned the short term cyclical nature of the Canadian mortgage landscape with 1 to 5 year terms. And we have an incredible opportunity in the next 24 months where 60% of all Canadian mortgages will be coming up for renewal. That equates to $1.5 trillion of mortgages, 3.4 million units. Now, just to put those numbers into perspective, the biggest year of mortgage originations in Canada was in 2021, where we saw just shy of $800 billion of loans originated. Now, for the next 2 years, should nobody buy a house in Canada again, and we solely needed to survive off of the mortgages that were already existing and coming up for renewal, well, that would mean approximately $750 billion a year in mortgage originations, which is very close to what we saw in the most historical year in Canada. We also have great opportunities as Canadians continue to access equity in their homes for things like renovations and debt consolidations. We're seeing an incredible amount of private investment, putting more rental stock and more development into the real estate market, and we're fortunate that we're able to finance those customers. And finally, reverse mortgages, as we see an aging population with a tremendous amount of wealth in real estate. There's currently $5.5 trillion of equity being held in the baby boomer generation of Canada, and they've all said that they want to continue aging in place. Well, we're able to offer them reverse mortgage solutions to access that equity as a lifestyle and income supplement so that they can continue to age in their homes and maintain the lifestyle that they've become used to. So I want to talk a little bit about the Pineapple solution and our technology platform. Pineapple One is our proprietary technology that focuses around three main areas: acquisition, management, and retention. From an acquisition standpoint, the goal has been to reduce the cost of customer acquisition and increase the probability of close. From a management perspective, the goal has been to remove as much people power throughout the mortgage processing life cycle as possible. Today, we've actually reduced about 8 hours of manual processing time from that loan. And from a retention standpoint, as mentioned earlier, the goal has been to really realize that full customer lifetime value. How can we move away from the transaction and focus more on the relationship and really realize that full potential $68,700 of customer lifetime value? The platform works through five main modules. We start by targeting a client. Where here we've built out a very unique segmentation algorithm, where with as little as a name and an email address entered into the platform, we can begin collecting data from both the customer as well as third-party data that's available to us. And we're able to start building out a profile for this customer and determining exactly who they are in the sales cycle. So are they a first-time home buyer? Are they someone looking to move up or move down, maybe purchase an investment property, an upcoming mortgage renewal, or a reverse mortgage? Whichever bucket they fall into, we're able to then take them through a very personalized conversion campaign. Here, we've built a scoring mechanism where we're identifying when these customers become probabilities for, either more information or moving further down the funnel or even possibly a transaction. And it's in those moments that will trigger a notification to the mortgage broker working on the file that, hey, here's what the customer's been looking at, here's who they are, here's their profile, and here's how you can help. And we'll provide that mortgage broker with talking points, with data, with information and education that they can then deliver to that customer to move them into the next phases. So now mortgage brokers aren't working on everybody in their portfolio, but only the high priority customers. We're then able to onboard that customer seamlessly into our system. They'll log into their portal, finish completing their portal and their profile and any information that we hadn't collected along this journey. And that information will get delivered to us on the back end, where we're able to provide them with an instant pre-qualification. That pre-qualification algorithm is currently predicting with 100% accuracy based on the information it's provided. How are we able to do this and process this loan? We've built the largest digital database of mortgage policies and guidelines in the industry today. And we're able to use that policy data to align with the customer data to source through the thousands of mortgage options and find the 3, 4, or 5 solutions that best suits that customer's needs. So we're processing that loan with accuracy. We're immediately sending it off to one of those lenders for approval. We'll get the feedback in the platform. And at that point, the customer can log back in and manage that loan fulfillment from within their system. So they can complete the e-signing package, they can track the status of their loan, and they can submit any documentation to us in a very secured environment. We can integrate various partners like real estate agents and lawyers into the system so they can help manage the transaction, help see what the status is, and provide us any information that might be required or request any information that may be required from their platforms. So now everybody's working within one environment, within one ecosystem, and working to get that customer to close. And finally, when we close that customer successfully, our data analytics kick in. As the first data driven mortgage company in Canada, we're using the power of data to find sales opportunities and service opportunities that previously never existed, all focused around cost savings or wealth creation. Let me give you a real life example. So, in today's world of high interest rates and high inflation, many Canadians, as I'm sure many Americans have as well, have incurred high interest debt to be able to maintain their lifestyles. What we've been able to do is through our data partnerships is determine which one of these Canadians has incurred a significant amount of debt or reached a certain debt threshold. And we offset that against the equity that they have in their property as well as their eligibility or qualification to see if we can consolidate that high interest 19, 20, 25% unsecured debt into maybe 5% secured mortgage debt, saving that customer thousands of dollars in interest and providing our mortgage brokers with a service and sales opportunity. We've been able to generate over $2 billion of potential loan volume over the last couple of years and been able to fund approximately 60% of that. So, an incredible opportunity for us to compound the sales funnel and deliver tremendous value to that customer. As a technology company, Pineapple One is obviously our flagship proprietary system, but we've built more platforms and more systems from within our business. The big one that I'd love to just quickly touch on this slide that we launched earlier this year was as the first mortgage company in Canada to launch an artificial intelligence integration into our system, and that was 3 years in the making, where we began to completely rebuild our data hierarchy and our data architecture to meet the needs of the AI algorithms today. So we've been working diligently for 3 years, and our team is very proud to have launched Maui, which is our AI, into our system today. And over the next couple of years, we're definitely going to see more iterations, more evolution, and more efficiency and productivity by using and leveraging the power of AI in our system. Our business model is straightforward and follows a three-pronged approach where we generate a portion of revenue as variable sales revenue on the front, where we earn approximately today 104 basis points for every dollar of mortgage funded on our platform. We also have a reoccurring revenue stream of a monthly subscription of $150 Canadian per month per user on our platform. And we also have what we call a pre-underwriting fee. So here we've built a technology-enabled underwriting center that allows our brokers to submit their files for verification and validation before they go into any mortgage lender, almost a pre-screening, where we do a fraud analysis, a compliance analysis, and ensure that that deal is going to be ready to close and ready to fund. Our lenders obviously appreciate that very much. Our brokers love how it streamlines their process and efficiencies, and we've been able to increase our revenue streams because of that efficiency we pass to both sides. When we look at our growth and our profit for the years ahead, there's a few main areas that we're focusing on. The first is continuous technology innovation and evolution. And I referenced some of it earlier in my presentation, talking about the integration of AI and how that will optimize our platform, creating more efficiencies, more productivity, and compounding the sales funnel through more streamlined data analytics and more algorithms. But we're also looking to increase or add, additional revenue verticals into the business, and primarily insurance. So we completed our IPO in November of 2023, and part of our use of proceeds was to build out a new business vertical, Pineapple Insurance, which is a wholly owned subsidiary. It is a regulatory requirement in Canada that all mortgage approvals come with either a life or creditor offering to the customer so that they can protect the large liability they're about to take. This has typically been done through third-party insurance providers. What we're doing is we're flipping the script, and soon we'll be providing our own insurance product attached to each of the mortgage approvals that come from our system. Pineapple Insurance has been backed by Industrial Alliance, which is one of the largest insurance underwriters in Canada. We've built the technology infrastructure and we've fully staffed that business vertical, and we're slowly getting ready for a launch in the next couple weeks ahead. And that's going to be extremely margin rich and bottom line heavy revenue for us. And finally, just continuing to grow and expand our business across Canada. I'd originally mentioned that this business started in Toronto, Ontario, where we were operational for the first 4 years. And over the last couple of years, we've been expanding and growing our business in each province across Canada. Today, we're represented fully coast to coast, and we're continuing to scale and add more users and more brokerages onto our platform. We do have the ability to scale our current operating expenses about our current revenue about 6 to 7 times before any impact to our operating expenses. So we have an incredible opportunity for us to really grow out this business. I just want to briefly talk a little bit about the people involved in the business, and then I would love to come to all of you for any questions that you might have. And I'll touch quickly on the financials as well. So you've had a chance to hear from me already formally. Thank you to me. Nice to meet all of you, and thank you for being here. My name is Shubha Dasgupta, CEO and co-founder of Pineapple. Over 17 years in the Canadian mortgage landscape, from various aspects and various areas and arenas. I really have a deep understanding and passion towards this industry and the impacts we make in the lives of Canadians. I think there's a lot of information available about me online. So when I do presentations, I love to share some things that you might not know about me or learn about me online. In my personal life, I'm an avid philanthropist, predominantly focused around cancer charities. I've been on the board for the largest cancer charity in North America, the Canadian Cancer Society. Today, I'm on the board for Melanoma Canada, and I've been able to raise over $6 million in my philanthropic life for these various charities. I'm also a loving father of 2 children and my wife. My co-founder, Kendall Marin, my chief operating officer and business partner, and one of my closest friends today. He has over 15 years of experience in the Canadian mortgage market. And he actually spent a significant amount of his career at Bell, which is the largest telecom in Canada, where he really honed his operational experience and his operational excellence. And he's been able to bring a lot of those learnings and experience into our business and really ensure a well run, well managed, and streamlined business operations. Krista Mitchell, our Chief Strategy Officer, has over 17 years of experience. She joined us from one of the industry's largest competitors, where she grew their business from approximately $5 billion in a couple of years of her time working in sales and strategy. She also helped, using her computer sciences background, to actually build the industry's first enterprise management platform. And she's brought a lot of her learnings and resources to our business today. Something about Krista that you might not know or read about online is that she's also an avid philanthropist. And we actually met 15 years ago at a charity event and have been great friends fighting for that cause ever since. Quick note about Kendall, something you won't read about him is he started his first business at the age of 16 and actually grew that over 5 years to become the largest nightlife marketer in Canada. And Sarfraz Habib, our Chief Financial Officer, brings over 25 years of public and private company accounting and an incredible level of financial governance on the company. And he too is an incredibly loving father that takes care of his kids who are currently in university. Our board is well rounded out by Drew Green, our chairman, who has built numerous high growth technology companies in his life. Currently, he's the CEO of Indochino, which is the largest men's apparel brand in the world today. And for us personally as a company, he brings a tremendous amount of board governance as well as mentorship to our management team from someone who's been the path and the journey. Nima Besharat, who's currently the CEO of Centurion One Capital and a lawyer by background, provides us wonderful capital markets and financial advisory to the board, and it ensures that we're always driving towards shareholder success. And Paul Barron and Tassis Janakakis together own the largest real estate firm in Canada, and Paul Barron is the president of TREB, which is the largest real estate board in North America, representing over 80,000 realtors. And you might have seen the press release recently where we were able to launch a full integration and partnership with the largest real estate firm in Canada, thanks to their support and help. With that being said, ladies and gentlemen, I'd love to thank you all once again for joining us on this presentation. And I'd love to come back to all of you and answer some of the questions that I'm starting to see pop up in the chat there. So I'm going to start first with a question that I see here. Are there any plans to enter other markets or countries, USA and other Commonwealth? So the answer to that question is yes. Originally, we had US expansion on our midterm roadmap about 3 to 5 years, but we've since accelerated that. Now, there is some modifications that have to be made to the platform in terms of adjusting to the regulatory requirements as well as the various data needs that we have for our system to really work. And what we've been able to do over the last little bit is align ourselves with a partner. There's two ways of being on the platform. Either you can be an individual mortgage broker through the Pineapple corporate umbrella, or you can be an individually licensed mortgage brokerage or company that white labels our platform. So we do have a firm that's in Alberta, Canada, that white labels our platform and has fallen in love with it. They're also duly licensed in Florida and have asked us that they want to be the pioneers of bringing this technology to Florida. So we've begun already working on the modifications and the requirements, and our team is actively looking to accomplish that in the next 12 to 18 months. As we enter the US and other countries beyond that, our goal is to not build from ground up. Partnerships are really what we're striving towards, and joint collaborations. So we're looking for strategic alliances with, prop tech or digital real estate firms that might have, integration ability and flow through right into the mortgage world, or other mortgage brokerages that might be able to leverage and benefit from this technology and how it can streamline their business. Hope that helps answer that question. And I'm going to move on to the next one that I see here, which is, can you provide some more color on an importance of partners? So yes, partners are incredibly important to, I believe all businesses. Our business specifically focuses around, what we call the 3 Ps. Well, we add 4 in there, but the 3 Ps are partnership, people, and product. And from a partnership standpoint, we benefit from a vast array of partnerships. So one that I just mentioned was the collaboration and partnerships that we have with independent mortgage firms across Canada, and how we're able to streamline their businesses and allow them to leverage a full end-to-end technology that can be delivered to their customers and have full flow through to their lender partners. Other partnerships are like what I just mentioned in the real estate community. By being able to integrate with some of these large real estate firms, we're able to get access to customers at the very early stages of their journey. And as they're purchasing property, looking at homes, they're immediately able to have connectivity, pre approvals, mortgage approvals, and get a seamless interaction throughout the entire ecosystem. Lender partners are very valuable to us in our business. So, the partnerships that we built with all of the leading mortgage firms and mortgage lenders in Canada that have been onboarded into our platform, some of which exclusively have allowed us to provide more optionality and more product to the market, and partnerships with other service providers. So data partnerships that we have. We're going to be soon launching out some partnerships for some very cool ancillary products that are going to be built right within the platform. So definitely, we appreciate and value all of the partnerships that we have in the business. I think there's probably time for one more question, and I see one here, which I'll answer, which is, can you share TAM and projections for your insurance offering? So as we're building that insurance offering out and getting it prepared for launch, our expectations on the insurance product when we look at it are pretty significant from a take rate perspective. Because it is a regulatory requirement that insurance is offered to all customers at the time of their mortgage approval, this gives us a unique ability to make sure that our product sits at the forefront of what that customer is seeing and the value that it can deliver them when obtaining this mortgage. Our estimations on what we can do with that is approximately 30 to 45% take rate on all of our customers. And when we're looking at our business funding, over $2 billion a year and probably closer to three by the end of this year, we can see how much potential insurance that has to offer us. Now, the other value of the insurance is, where we see lower margins on the mortgage side today, the insurance margins are significantly higher at over 50% right now. So we have an ability to really drive, again, some bottom line rich revenue into the business, increasing the overall, moat around the customer, the fence that we have building around them, as well as the revenue that we can continue to generate from them. But shortly, as we get this more firmed up and prepared for launch, we'll certainly be putting out some more press around that with some more specific details and figures around the exact projections of that. So I think we're approaching time here. So with that being said, I wanted to once again take this opportunity for thanking everyone to be here for their interest in Pineapple and learning a little bit more about how we're completely changing the Canadian mortgage landscape and how we expect to plan and to grow and expand our business in years ahead. If anybody has any further questions or comments, I'm always available and would be happy to respond, or would be happy to also book a one-on-one with all of you. With that being said, thank you, everybody, and I hope you have an incredible rest of your day.